All right, guys. So in this video, I'm going to be breaking down the trade of the week. And in this case, we have two solid trades that I do want to call out and ones I want to break down. One was on Tuesday, and then one was on Friday. If you guys follow me on Instagram, follow me on Threads or X, then you know that I have posted what I was expecting the markets, how I was expecting the daily charts to snatch out a pool of liquidity. So in this video, again, I want to break down why I was expecting that, and again, the trades of the week. So tune in. There's a lot to learn this one. It's going to be less impact. And I plan on doing these on a weekly basis. Every week, I'm going to look at the charts, Nasdaq specifically, and see what market or what time, what day gave us the best trades of the week. The ones that are easy to see based off of what I'm looking for in price. So let's dive straight into it. So first of all, look at the weekly chart here. And go ahead and put some makeup on this thing. So immediately what you know is we have a weekly fair value gap here. All right. So when there's a weekly fair value gap, it's important to pay attention to that because we're going to see how price will use these levels in the lower time frame. All right. So that's what we have on a weekly chart. We just have this weekly levels, this fair value gap here. Let's go on a daily chart. I look on a daily chart. Okay. Now on the daily chart, I'm just going to hide the weekly levels for now. Daily chart, we have price drop lower, right? Breaking structure. After breaking that structure, price trades higher into the last up close candle. So on this day, this is the last day there was a willing buyers, right? Before the sell-off. So price goes there and we have a sell-off. And then price trades higher again on Monday, all the way up back here to the last up close candle again before this drop off. So it went back to the last price where buyers were willing to buy, right? And then where sellers are not willing to exchange hands. Lastly, right? So from this buying, price goes here, and sellers are willing to exchange hands there for a sell-off to take out these pools of liquidity, which I called out on, again, the various platforms I'm on. All right, so that was pretty straightforward. Nothing crazy. It's just there's a lot of liquidity. A lot of traders, retail traders, see these levels as support. And again, we look at those as smart money traders as a level. Instead of using it as support where we enter the trade, we use it as a target where we exit our trades. So it's different. We use it for two different reasons: to target where price is going to go. So it's indication. If we see a lot of support, quote unquote, being formed here, right? Because a lot of retail traders, what they'll do is something like this. And I used to do this before. They'll draw this out as support, right? So they're looking to get into trade. That's the market's trading here. They want to get into for buys. They want to get in for buys. Meanwhile, we are, when price up here, we're looking for this as a target for a nice run lower. Just as a retail trader, if you're getting here as buys, where's your target at? Perhaps they'll target what the high of this range, maybe, I don't know. But point is, when we see there's a cluster of support, we want to expect price to eventually find its way lower, especially if we try to trade higher into an order block. You know, notice again, we had this run here that broke structure. And price trades higher into this order block or last area where those buyers willing to buy and if sellers willing to exchange hands with them. Because you can see right after this buying occurred, we have this big massive sell. So again, we're expecting the same exchange of hands here. Mark goes back up here with their buyers, and then we sell again to take out the liquidity pool here. And honestly, expectations are we're going to run these lows as well. Right? I don't think this run here is enough because it just wicked it as well. I want to see it run aggressively below that. But that's beyond the topic of this conversation. So daily chart, again, we have market breaking down. Again, notice the week starts here. Let's go on the 4-hour chart to outline that 4-hour chart. I'm just going to outline this real quick. The week starts, let's call it here. Make that orange. 4 markers, okay. Well, so the week starts. All right. So week starts, and we trade higher into what the daily order block level. I'll look to your left chart. Y'all see what the 4-hour fair value gap. I'm not going to highlight that here today. We're trading here, and you see us consolidate. All right. What is price doing here? What are the market makers doing here? They're accumulating shorts so they can distribute them lower to take out these lows here. So this is a 4-hour market maker sell model. On a 1 hour chart real quick. Didn't want to show everything on me. All this. Okay. And then here's your 1 hour chart here. This is what we had in price. So you can kind of see again, if you start right here where the market opened, price trades higher. And one thing you probably notice on my charts right now, right, is I'll put the weekly levels back. You also see these red lines. So price was trading within 1,000 points range, all the way from 21,000 to 22,000. That's the range we're in. So I like to look at each quarterly level between those ranges. So we're looking at what 21,750, 21,500, red lines, and then 21,250, and ultimately 21,000. So price is trading within that range. So I'm watching also how price interact with each of those levels. Like when price trades those levels, is it trying to stay above it? If it's going above it, is it how many points is going above it, and how quickly is it then rejecting that area, right? And you can see up here, right, when we trade higher, we're trading to the 21,750 level. So when that happens, we're watching. Is price gonna keep on taking off? And you see stalls here, right? We have this fair value gap here, right? And then we immediately drop away. So that's a good sign. To me, price is 2 weeks, even gets to 22,000. And then I notice liquidity pool right at 21,000. Chances are we are going to go lower. And also based off all the other stuff we discussed on the higher time frame, we can expect the price to act the way we need to act. And again, remember this daily level here. And make it a little stronger here. Boom. All right. Now let's go to let's put the drawings on here, right? Let's look at a 1 hour chart here. You can see fair value gap in here. Look at how that held price, right? It held it real good here. And then you can even see here, if you draw this out over here, see how when price trades below that, it hits it and drops off. We'll get into the details of that. And even trades back here, you see a little sell off here. So using this as an inversion level. And I'm just going to draw one thing I didn't draw earlier, which is this right here. I'm just going to draw this liquidity pool on that 1 hour chart. We can even draw this real quick. Add all of this to the 1 hour drawings. All right, so you can see what triggered this, because if you look very closely here, let's go on the 15-minute chart. This is a 15-minute chart, by the way, so let's see what's on here that's exciting. Remember, what's this orange level here? Hold on. I want to make sure I get this right. Okay. I don't know. Hold on. 15-minute chart. Trying to figure out what this orange level is real quick. If I need to delete it, I'll delete it. I don't know what this is, so I'm just going to delete this for now. Oh, that's how I was drawing the quote-unquote support that traders see on the daily chart. That confused me for a second. So, anyways, 15-minute chart. Nothing really crazy. Okay, this is all I want to show you guys here. So, pay attention. Remember, on Monday, right, we have this highs right here, right? That was created on 18 o'clock. So still a high. Price trades into there on Tuesday, pierces above that 1 hour fair value gap as well, and drops lower. So that's important. So let's go ahead and get into the detail. I think it's about time to get into details of the trades of the week. And to me, it's two. So we're going to focus on Tuesday's trading and Friday's trading. So to start off, let's go ahead and get into Tuesday. I'm going to do a bar play here. Okay. So going into Tuesday here, Let's see. Stay here. We had again a run higher here. Look at the time. 9:30 a.m. We have a pierce here. Perfect timing. Right? That's when you expect price to react to a level like that. So what I also want to pay attention to is what happened. So if you look at your Forex calendar, we had news at 10 a.m. We had ISM at 10 a.m. Just keep that in mind. But anyways, 9:30 opening, we hit here, pierce these highs, and then price drops aggressively lower, right? And then look at this level right here. This is from the weekly level, right? Weekly fair value gap high. That's that weekly level, right? So that's gonna be important. Let's go to the 5-minute chart real quick. Look at the 5-minute chart. Again, you have price what? 9:30 pierce higher. This is fair value gap right in here at 950. The price trades in there. So clear break of structure, boom, run higher to the last up close candle. Price just wicks it. Bodies don't even get beyond the midpoint of this fair value gap, just wicks it. And we see another drop. Go on the 1-minute chart, right? We also had an SMT here. So if you look at S&P 500, we're going to do that real quick. You notice that S&P 500 over here did not run these highs. Meanwhile, back to Nasdaq, we had that run here. So that's why I identify this as SMT. All right. And then price does what? Trades up here, right? There's a little fair value gap in here. Then we have another drop against a daily order block right here. Okay. So it's going into a lower, even lower time frame. So let's take a 15-second chart. So if you're going to the 15-second chart, even lower time frame, you're going to see a mini market maker sell model. You see how price accumulate from here down here, right? And trades higher. Okay. And if you really pay even, oh, sorry, that's a different trade. Apologies there, guys. Focusing here again. So same thing. You see a mini market maker sell model in place. So if you pay close attention, right, you see how price trades higher in here, and we have the SMT and price drops lower. What does this do here? It trades higher again into what? This inverted fair value gap. So it's a smart money reversal. Lower sell, trades higher into this order block. First distribution, second, you can even call it a third distribution. But the point is the entry is right here. However, again, news is at 10 o'clock. So this is one where if you're very confident, yes, you can execute. However, you have to have a tight stop loss. And it was ISM, which wasn't nothing. It does move fast, but it's not like an FP or something. So you could have executed ahead of time, right? But ideally, perhaps I would wait for this for 10 o'clock to hit actually, which is on this candle, right? So we did have what? Again, a fair value gap pair presented itself. Now I just want to see one thing here. So I should go deeper on the 5-second chart, which has been maybe too fast at the moment. Let me just see the 5-second chart for a second. Yeah, the 5-second chart did give an immediate entry, perhaps. So after that big drop off at 10 o'clock, it did come back here. Maybe could be used for entry as well. Stop loss above here. But you have to be very quick and really watching all your time frames for you to see that entry on the 5-second chart after the news release. Okay. So one entry would have been here if you're confident to do that right before news, or again on the 5-second chart where we did see a retracement right here, which is also at the high end of what is 5-minute fair value gap, right? So, well, it hadn't formed that at time, so we're going to ignore that, right? But point is, on the 5-second chart, you could have caught this little reversal. Again, it would have been harder to catch, right? But just saying that it was a possibility. Let's keep playing this out. And then now again, I personally missed that trade on that Tuesday. So what I did take was a trade in here. And this is one that was after 10 o'clock, after news release, when price will show where it wants to go. I still felt confident taking a sell. Even though, right? Even though price had already moved substantially, some traders are not taking that, but I actually took that trade. One reason is being that we're still above. I like to take my trades above opening prices. So we're still above a weekly opening price. As much as we're not above 9:30 opening price, we're not above midnight opening price for that day. I'm also then referring to the weekly. Where's the weekly opening price? And it's auto over here. So if you draw that out, to me, if we're still above here with the context that price is going to go lower for the day or for the week, you can still take that as a trade that's in the premium or trading or buying or pretty much selling price expensive. So if you look closer on the 5 minute chart, after 10 o'clock, after the news release, right, when you're now safer to probably execute without any manipulation, price goes higher, into this 5 minute fair value gap. And remember, this orange line here is from the weekly level. That's a weekly fair value gap high. Okay. So also watching that there. Let's go to lower time from the 1 minute chart. Okay. And price goes higher again into that level. And if we go to the 15-second chart, and just to backtrack real quick, what we have here is what? Smart money reversal. So we have the first drop. And we have the lower sell here, second drop. Then I'm anticipating, right, after I see two levels of distribution or price dropping lower, I'm now going to expect on the third one, I want to get in. I'm expecting another sell off. So it's not like I'm just getting in. Like I'm expecting a sell off based off what I'm seeing. What the first, we call it a small money reversal, then a lower sell. And then it should be a first distribution that forms in what is fair value gap or potential order block. But I'm hypersensitive to it not going too high because we have this weekly fair value gap level. So we can expect that to hold price back from going higher. Okay. So let's go on a 1 minute chart and back to the 15-second chart actually. And then notice on 1 minute chart again, what you want to see for enter trades run on liquidity. So there is a high here. So we get that run on liquidity here by around this high right here. Boom. So that's run on liquidity taken out. Then we start seeing price turn back around. Go to the 15-second chart. You can then see this same thing, same phenomenon of market maker sell model. Price what? Trades higher into what? The 5 minute fair value gap drops lower, creates what? This fair value gap right here. So it's a smart money reversal up here. The lower sell right here because it trades a fair value gap. Now, what's this? A first distribution right here, drops lower. Now, even price trades back to this order block here. This would be considered a second distribution for another move lower. But I like this first distribution entry level here. If you look to the left of this, we also have what? A 15-second inversion fair value gap. Previously, looked at how I use it for support. The price gets below it, uses for resistance, and it drops lower. And what level were we targeting, right? The 21,500 level. Remember, with context, that price barely traded above the 750 level. So it's probably going to go to the next quarterly level. So another way I look at the quarterly levels is I want to see price trade between them. So price leaves one and starts dropping, I expect to hit the next one. So again, we see this fair value gap entry right here that we could use for a trade, 25-point stop loss for a run at minimum below these lows and to the next quarterly level, which is almost a 100-point move. But what the bigger picture is, once you see price interacting with a fair value gap on a high time frame, remember this orange line here is a weekly fair value gap. My mind goes to how does price want to interact with the high of that fair value gap and then the low. So my expectation is that price is going to trade from the high to the low of that fair value gap, right? So since we're trading up here at the high, where's the low? Where's the bottom of this weekly fair value gap? If we extend this out, it's down here. So my expectations are really that price eventually gonna make its way all the way down here. So that's a 250-point move that we're thinking of once we're all the way up here. Let's see if we eventually get that. I'm just gonna put it on 1 minute chart so it's more clear. See what's really going on here. All right, dances around. I want to say it gave us that move mentioned in the PM session or at 12, one of the two, either during lunch or during PM session. But point is, I'm really watching because my expectation are we're going to hit here eventually. And then, yeah, perhaps I was giving the PM. Let's just speed this up. I don't need to watch like that. Let's go 5 minute chart. And give him the PM session. Eventually, boom. So yeah, it still gave it to us this within this day. And again, if you didn't want to execute based on that 15-second chart execution, look at the 5 minute chart. What do you see here on the 5 minute chart? You see this fair value gap here. And you remember you have this what? Smart money reversal, a low risk sell, first distribution. Then this is your second distribution. So again, I like to get on the first and second distributions on any time frame. As long as the narrative is still there, I'll take it. So this could have been your entry on the 5 minute chart as well for, again, a run all the way back here. So if this is what you use instead, right? Still, again, another potential 200-point move. So Tuesday was a nice day to execute on these markets, right? Very, very nice day. Straightforward, simple. We had the markets give us exactly what we wanted. We had SMT. We had runs on liquidity. And we had price interacting with the weekly levels. All right. So that was Tuesday's trading. Now let's get into. I just want to go back to because actually it was looking beautiful on the 15-second chart for a second. There's a beautiful, beautiful entry here. Over here, right? Again, you're taking this, take some profit here, and then some profit here as well. But yeah, it's a wonderful, wonderful trade. What I do want to see, honestly, on this reversal, let's just see if there's any SMT. Let me replay this real quick. Be a little thorough here. Let's see something real quick. Nothing crazy in terms of. But yeah, so that's that for Nasdaq on Tuesday. I'm just trying to also check if there's any fair value gaps in place that might have caused a. Yeah, so you can see here there's a fair value gap here. Something. Markets turnaround is typically either a fair value gap trading to a run on liquidity. That's what I was looking for. I was trying to see if there's anything that could have indicated why price could potentially turn around and why is fair value gap important. Look how this previously held price up higher. So trading to there, you have to be hyper cautious of what's going on. Okay. Even these last series of down close candles could act as an order block to support price. So going back to that 15-second chart, it makes sense why price dropped in here. And potentially start reversing. Now, let's get into Friday's price action. And look at this fair value. I'm also going to extend this fair value gap here. See how that reacts to price. You see why it's important to understand. When you see a fair value gap, look at that. Look how price reacted when it came below it. Drops. This is ugly, so it's nothing here. That's why I'm not highlighting Wednesday. The price action on Wednesday was very ugly. Was there trading here? Yes, but I want to highlight the best trades of the week. And Thursday was Jimmy Carter Day, so the markets closed earlier. And then we get into Friday. There's also an excellent trading opportunity as well. And this one we actually kind of got that run on liquidity that I was telling you guys will likely happen. Okay, so what happened on Friday? Let's get into details of Friday. All right, so first of all, let's just look at it. We have from a 50-minute basis, we have run up here, right? What they do, just like on Tuesday's trading, took out liquidity, run higher, boom, into a fair value gap, drop lower. So this is what? A reversal, a low risk sell. First distribution will be what up here, trading to this fair value gap. And second distribution will be what? When price trades higher into this order block and then dropping lower. Notice it did fail to go lower here. Let's look at S&P 500. We did actually get that drop lower. And again, once you see SMT take place, meaning one correlated asset makes a lower low while the other one does not, that usually oftentimes could yield to a reversal or a deeper retracement, take out a liquidity pool. So if I was in this for a second distribution, right, got in here because we see this order block, I'm raising one price against respecting up close candles, right? It's up close candle, price trades lower, trades into it, drops, trades into this fair value gap, drops. Then I can expect that it's going to give another drop here. And it just went to what? The bodies. But however, if I saw S&P 500 ran lower, especially at 12 o'clock, which is the lunch hour, which is when, again, you can expect lunch is a whole other ball game. But point is, AM session's done trading for a while. So that's like a pause and breaking the market to like 1 o'clock, 1:30 New York time. So it's also more significant when you see the S&P at a specific time of the day. So at 12, you should know there's a strong likelihood of just S&P taking place. Then price not going to run lower anymore. It's actually going to run higher and take out some liquidity. Okay, so let's go into the nitty gritty of this. 5-minute chart for a second. So on a 5-minute chart, we had NFP at 8:30. So you don't want to trade NFP at all. You don't want to be ahead of it. You want to wait for that to happen. So NFP, we had this aggressive move lower. Boom. Okay. Now, notice the shaded or yellow area. That's the 1 hour fair value gap. Look at the 1 hour chart from here. What I like to see again is price closing outside of that. Once that happens, I can then expect price. This is key here. This is essential. I can then expect price when it goes back to those levels. I'm expecting to use that as an inversion level, especially when there's context behind it. So again, we had this big move here, and price trades what back into it, and look at how it just wicks and eventually drops lower. So let's get into the details of that. 15-minute chart, you can see it here. After closing below it, trades higher into it, which is also 15-minute fair value gap, and drops. Let's go to 5-minute chart. So with that context, again, right, 5-minute chart is right here. At this point, we understand that, again, the previous candle has closed, right, outside that 1 hour fair value gap. So now what we want to see is price drop lower. If you go on the 1-minute chart, remember, keep in mind, hide this all right here. Keep in mind that we created what? An order block here. It's up close candle. We had this aggressive move here. So order block created. Let's go on a 1-minute chart. Remember, keep in mind, whenever one thing we're looking for, we want to trade above what? 9:30 opening price. We want to trading above opening prices. That gives you an indication that it's a premium. So one thing I was looking for in this day, I executed on this trade, but one thing I was looking for was I want to see price go above it. Now I don't necessarily have to execute above it. I at least want to see price go above 9:30 open price, see how it reacts. Knowing that we're going to be in a hurry to take out liquidity pools, I didn't really expect price to go fully aggressively above it. And again, keep in mind we have a 5-minute fair value gap here. So this little move above here was good enough. A 9:30 opening. That's when stock market's open. So we had what? A little movement above 9:30 opening price. This little wick. We drop lower. Breaking structure. We trade higher into a fair value gap here. We drop lower. We trade higher to what? An order block. So we have here again a smart money reversal, a lower sell. Then it's the first distribution here taking place at this order block here. So I'm gonna go ahead and put the makeup on these charts real quick. See this fair value gap right here? Price trades into that, and then it drops lower. Look at this level here. This is the 50 level. Look at this fair value gap right here. What do I mean by the 50 level? Look to the right. Important. I like to see PDA rates form at those levels. So here was your entry at 945 with a stop loss above here based off of the 1-minute chart. Okay. 50-point stop and expectation. We're gonna run what the liquidity pool on daily chart, which is all the way down here. That's one entry based off the 1-minute chart. And then if you didn't get that entry, if you're someone else like, I want to get in after 10 o'clock, again, that retracement here, what did it trade back into? The fair value gap right here. And we have a breakdown again, another entry you could have taken here, an inversion fair value gap here. The price needs to drop lower. Watch this last up close candle right here. Boom. So at this moment, you're going to see price struggling to go lower. Right? At that moment, you're expecting then, especially if you see S&P 500 to run lower, you can expect a reversal. So this is another entry right here. If you're someone that wants to get in past 10 o'clock, if that's just your key time frame. I know some people, and sometimes I like to do that. I don't want to press any buttons till beyond 10 o'clock near time. So even with this right here, still another 140-point move you could have caught with Nasdaq. Let's go on the 15-second chart for a second. Make up on this. So go on that 15-second chart. You can then see again, it's even more clear. You can move your stop loss even tighter. Right here. Okay. So same thing. Price breaks down, runs higher, fair value gap, breaks down, breaks down again. This series of up close candles are order blocks here. We trade into that. Look to your left of your chart. What do you see? An inversion fair value gap here. Okay. 15-second chart. Same exact thing happening. That's why these markets are controlled. Then we have a sell-off here. And then we have the fair value gap in here. Price just trades on around the 50 level. Right? And then trades into this fair value gap too. 15-second chart. And then we have that drop off. So that 15-second chart is very interesting to see this inversion fair value gap. Plays a role. If you go here again, same thing. Look at this right here. You could reduce your stop loss to right here. Last swing high. That could have been a 20-point stop loss. Once assist risk reward. After we see that price is broken down, right from here, breaks down. Lower sell here. Another smart money. So smart money reversal. Lower sell. First distribution. And price goes higher. You can expect the second distribution. And expect again the PD rates to be respected. You're not expecting price to go or disrespect PD rates when it starts breaking down. You expect to respect every PD rate that's in price. PD rate again are fair value gaps, order blocks, breakers, all those type of things. So again, price trades higher right at 50 level, right? Rejects aggressively to take out those lows. So those were the trades of the week. And if you look at them, it's really 3 trades. The risk reward on them was what, a 1 to 4. So that's a 200-point move here. Another 150-point move. Let's just calculate that. 200 plus 150 is 300 plus 300 plus we're gonna get in here. They're trying to hide from us. Plus another 160. So about 450 points really could have caught easily on Nasdaq. So again, that's why it's important to just pick the best to summarize everything, right? 450 points. Picking the best trades. All right, this is a lesson for me as well. What I'm doing here is breaking down my trades of the week so I can go back in this and look at this. So it's not going to be up here forever. But point is, I do want to keep a track of like the best trades and like how many points we're going to capture. Like we could have captured, going to next week, what can we expect? So the fact that 450 points were given clearly, easily, just 3 trades on 2 different days, the best trades. If you're risking 1 contract, that was a $9,000 potential, right? That's 450 points. We can also calculate the risk, 25.5 points, 25-point risk here, right? 25-point risk there. Risk here. 24 points, so 50-point risk. In total, let's call it 50, so 100 points. So let's just call it risking 100 points to get 450 points. Right? If you look at the risk reward, that's still 1 to 4.5. So the point is, $9,000 can easily be handed to us this week with just one contract. Right? So it's important, again, just pay attention to best top of the line trades, keeping it at the 5 minute levels, and then all the way to the 15-second chart. No need to even get to the 5 second, 10-second charts, which I do sometimes. But I'm probably even gonna cut that out of my trading strategy going into next week. Just keep it very simple. Instead of looking at 15-second, instead of looking at a 30-second chart, 15-second chart, 15 and 10. I mean 10 and 5-second chart. And they do give insight on their own. Don't get it twisted. Like the 5-second chart does give insight, but it does move very, very fast. I think the 15-second chart is good enough for me to, if I know it's good enough for me to get some insight, it's not even a question. So going forward into next week, I will just cut it down to 30-second, 50-second chart. No more 5-second chart. Even though you can see the beauty of this as well on the 5-second, you can see it. But I'm just not a computer. It's hard for me to like. It moves so fast that it can make you react as fast as it is, right? You want to react because you see the 5-second chart moving. But if you keep it at 30-second, 15-second, it is still fast, but it's enough time to at least think through your actions. But again, 450 points given to us this week, and I think the market's still going to drop going into next week, but that's another conversation for another day. But find that insightful and helpful. Again, like, subscribe. I'll catch you on next one. Those are the trade of the weeks I had for you guys. 3 trades. Go study it. See if it makes sense. If you would have executed on those trades. Next time, talk to you later.